Sometimes the system can feel rigged in favor of the large corporation, shutting out the small guy. But what happens when the actual rules are changing to accommodate the corporate bully?
This is a different spin on one of those hot topics out there. And this is all about SpaceX. And it's a topic that has us scratching our heads, asking seriously, what could they be thinking?
Welcome back to Seriously, What Can They Be Thinking? The show where we take the biggest business stories of the moment and try to figure out lessons for the everyday manager.
And this week we have to talk about SpaceX. I mean, do we have to? I guess we have
We
to.
absolutely have to because honestly, I'm scratching my head and wondering about this. How can people be thinking about this the way that markets are advertising it?
After watching or after reading about their latest, and you're going to tell us the name of the form that they have to give us when before they file for their IPO, but I'm not even sure that SpaceX is a space company at the moment. Like I am very confused about. So what are they? I mean, that's the kind of the first question I have.
So let's set the stage. SpaceX, Elon Musk's rocket company, is going public. They're listing on the NASDAQ on June 12th of 2026 under the ticker SPCX. And they're supposed to be valued at $1.75 trillion.
So that is trillion with a T. And that would make it one of the 10 most valuable publicly traded companies in the US, which is also bigger than Tesla and bigger than almost anything we've ever heard of, for sure.
Yeah. But you have to understand, they're only selling $75 billion worth of shares in this IPO. So that's roughly 4% of the company. They're actually keeping 96% private. The people who already own it are getting 96%. So the largest IPO in market history, the founders are essentially saying, you can have a sliver, we'll keep the rest.
I have a problem with that. I have a big problem with that, largely because the way that we see Tesla run. But I think if you look at the rest of the investors out there, they're very excited about the tiny little sliver that they get to buy. Right? They started the bro show. What was it, June 4th? And I think
Mhm.
they were courting 125 analysts from 21 different banks to talk about SpaceX management.
Okay, so let me do some little definitions for those who don't understand what I am talking about with roadshow and what Cindy's talking about. So, a roadshow is actually when the management of the company comes out and meets with individual investors or corporations or mutual funds, hedge funds, pension funds, people who are going to try to participate in the IPO to sell them on the idea. Right. So they're going to take orders basically, and once they've got all of the orders, they know what they're that people are willing to buy and how much they're willing to buy. Then they will set the price by Thursday night so that they can say, okay, when we launch, we know we're going to sell all of our shares that we're issuing at a certain price, right? So that is it's the sales show associated with it. Now, what is interesting about this is that the big argument for the long term has been that this is something that's only given to professional investors. It's the big mutual funds, the big pension funds, as well as the big hedge funds out there. So it's only available for the wealthy in a lot of ways. Now, SpaceX is trying to fix that. They're saying that, and they're trying to go to the retail investor. And so on June 11th, the night before it prices, they're actually going to do a very big, what I consider a publicity stunt of inviting individual investors, about 1,500 of them, to come in and have a roadshow day with Elon Musk and company.
And I take it you're not on the list because I really want someone to ask him seriously, what are you thinking? I mean,
Yeah, there we
that's
go.
because we know what he's thinking. We know what
Well,
he's
I know
thinking.
what
He's
he's thinking.
thinking, I'm
He's thinking I'm going to make a big
gonna
old
be,
payout.
yeah,
Yeah.
because he needs to be richer. Historically, Musk has had a pretty iffy relationship with the SEC. I mean, we all know that he's gotten into pretty hot water before.
It is really shocking, actually. So the SpaceX IPO has actually gone lightning fast. They got their approval from the SEC much quicker than was originally expected. And yet, if we want to talk about Musk and the SEC, then we got to go to whiskey, weed, tweets that were kind of illegal, and some very large settlements. But even though Musk has had a long history of iffy behavior, let's talk about what's actually inside the company that is going to go public this time, because the prospectus, which is the document the company must issue, otherwise known as an S1, it's a pretty
Thank you.
fascinating document.
Yes, one. Thank you. So, SpaceX is a company that my family follows. Like cybersecurity and space are two things that our family follows pretty significantly. And so we have watched most of the launches that that have been big launches anyway that are televised. And we've watched the rockets self land, and we've watched the first Dragon capsule docked at the space station. So we have seen a lot of the space stuff that is in SpaceX, but it's kind of silently become something other than just space and maybe not even predominantly space. So I think this is really important. If you have a rocket, the importance of a rocket is you can deliver satellite and cargo into space, right? So Starlink, most of us know about that. It rides on the back of the rockets into space, right? And then we can have communications. But it seems like, I don't know, Musk has gotten a little free with the money from his other companies and has bought Twitter or X, whatever he bought,
Yeah.
and then he's folded a whole bunch into SpaceX. So it's not just a space company anymore.
No, no, yeah, it's got X, which is the old Twitter. It's got
Mhm.
XAI, which is Musk's AI company in there as well. It's very complicated, and the financials in those S1s really do reflect that. The AI unit alone, right, spent
Mhm.
$7.7 billion in just the first 3 months of this year and posted a $2.7 billion operating loss in the same period.
We expect that based on the conversations we've had around other AI companies, that we expect those losses to continue. But just to put that into perspective, though, the company spent about $9.40 for every dollar that it earned. And so X, the social media platform itself, the ad revenue fell by $100 million in Q1. So, I mean, it doesn't really feel like a lot is going in the positive direction for this IPO.
Now, here's the thing, and this matters a lot for the index story that we're going to get into. SpaceX is not profitable as a whole, right? We know that. In fact, Goldman
Mhm.
Sachs, who's helping write the underwrite, is one of the major underwriters of this IPO, penciled in that free cash flow was not going to happen until 2031, 5 years from now. Right.
Which one of those companies is going to generate that revenue? That's what I want. Is it the AI? Is it? It's not Twitter. We know it's not the company
It's
formerly known as
it's
Twitter.
Starlink, right? Starlink is the saving grace story here,
Mhm.
right? The satellite internet is growing. It's a real business. It has real subscribers. It has real investment. And that is what is making some people comfortable with paying nearly $2 trillion for a company that's burning cash on AI.
So it sounds to me this is just, well, as with any IPO, they're saying trust us, that space is going to be incredibly profitable, and maybe just don't look very close at our numbers because then we might get in trouble. And I have a little bit of concern about that. Right now, we're looking at $135 a share. Is that going to change based on the conversations they've had, or is that locked
It
in?
it can, it's probably not gonna change very much, depending on if they get a lot of momentum this week and they see a lot more in the roadshow. If they get a lot higher of bids than they originally expected, they might push that up. But at this point, most people are expecting about $135 a share.
Okay. And what's going to happen on the first day? Some of them, some stocks just tank on the first day. What's this one going to do?
So so this is really interesting. So understand the $135 a share that we're talking about, that's the money that's going to end up going to SpaceX. Okay. That is not what it's going to trade at once it goes into the secondary markets, the NASDAQ, the New York Stock Exchange, all of the actual exchanges, they're secondary markets, right? So the initial market is the initial sale, $135, at which point then we are now trading that limited number of shares that are outstanding between everybody who wants it, which says why an IPO can double in a single day because people are trying to get into it and they didn't have access to the $135 a share. And right now, Jim Cramer, who for all his faults, is one of the best at predicting the present. And I know that sounds a little bit weird, but he's really good at predicting the present. And he's predicting it's going to double in one day to $4 trillion. And he's basically comparing it to 1999. He's saying, look, we're in a dot com bubble, and this is going to be it. It's the AI bubble, and we're going to see it with SpaceX here.
I know the reason we're talking about this is because of what we talk about is the potential consequences of this too as well. But if 96% of the company is still owned, we're only making public 4% of the company. Usually when you do an IPO, it is to raise money. If they raise $75 billion. That's 10 quarters of loss for XAI. Like, they're going to run through that like that. So what? So why in the world are they doing that?
Well, they need cash. They're run out of cash, so they do need to go in. And once they're
Okay.
in the market, they can do what's called secondary offerings and add more and add more and add more. And that's probably what will happen between now and the end that profitability mark in order to continue to fund this
Okay.
fuel, right? And
Okay.
and let's be honest, if you want to go back to history, Musk has been a genius, and I mean it. He is a financial wizard on finding ways to raise money outside of the traditional methodology by issuing a
Yeah.
like in Tesla, he has found ways to raise millions or billions by manipulating that stock price and issuing things like uh, uh, stock options and stuff like that to
Yeah.
actually artificially float that up without doing an official secondary in there. And I totally expect that to happen again because his goal is to push that market cap as high as possible because that is actually what he is being incentivized on with his payment structure, which is a whole nother
We'll,
topic that we should get into another day.
we'll get there
But
in a minute for sure. For sure.
yeah,
Okay. We have this giant thing that's going to happen on Thursday, the
yes,
12th, something we have never seen in the market before because that T, that $1 trillion, the $2 trillion company hitting the market. And so you would think that everybody would be excited about this opportunity, but tell us about indices and how they
yeah.
work.
You got to think about it. What we've been talking about up to now, right? These public IPOs is what's called the active market, right? The active
Mhm.
investor. So these are mutual funds, pension funds, et cetera. These are people who are professionals who are trying to invest in. The other portion of the market is called passive, right? So when you go out and you're looking at your 401k and you can choose the S&P 500 index or the Nasdaq index because you don't want to pick an individual stock market manager, you're saying, look, just average into the index. It is a highly quality way to invest without having to spend days and weeks and months of your life looking at the market all the
Mhm.
time. It's called passive investing. And it has gone from about 5% of the total market to more than 50% of the total market. More than half the money invested in all the stock markets across the world are passive. They're done through indexes. Okay. Now,
Yeah.
indexes have three different ways in which they can be created. I'm not going to kind of go into the difference between price weighted, equal weighted, and market cap weighted, but market cap weighted is the most common one, including the S&P 500 and Nasdaq. So, how big of a company you are is going to matter. And at $1.75 trillion dollars, as you were talking about earlier, these guys
Mhm.
are going to be one of the top 10. Actually, they'll be the number 7 in the S&P 500 should they be allowed to go into it. The professionals who run those indexes, then they're basically a computer, right? That they're not actually making decisions. It's passive. They're saying if the market is 5% of the market cap is Tesla, then I'm going to have 5% of my money invested in Tesla. I don't care what's happening in the market. I'm just mimicking the market.
Yeah.
Okay, so this is passive forced purchasing or sales. The problem is you
So when
actually
I
have to
was
be a part of the index.
this whole thing gave me flashbacks. As a kid, my parents taught me about mutual funds, and then you had to research all the mutual funds and you had to figure out what it costs to invest in a mutual fund. And then somewhere along the way in my childhood, my parents discovered EFTs. And they're like, Cindy, forget everything we taught you about mutual funds, invest in EFTs. Because, like,
ETF. Yeah, backwards.
that
ETF.
what's an EFT?
I don't
I'm thinking
exchange
of
traded funds,
yeah,
ET.
ETF. So, okay, sorry. EFT, ETF, 222, 21, whatever it takes. Anyway. Okay, ETF. So, but that was the thing. Just put your money in
Yeah.
here. You'll be fine in the long run. So, like, I totally get that, and most of us are really invested that way. We have
Yes.
that's the way that we distribute our money and the way we generally distribute our risk, right? So
And if
we know that the market will
you
grow.
went into the efficient market hypothesis, if you go into financial theory, it's a smart move.
Smart thing to do.
I don't want to suggest that it's not a smart move to
It's a good
index.
thing. Yeah,
It's a good thing for the average investor. I absolutely agree with that. The problem is that Musk has used these rules to find a way to manipulate the market. Okay. By
yeah.
becoming this almost $2 trillion item, He is now saying, okay, put me in as a part of the index because everybody's going to want to cut in a piece of this. That's why he's doing that retail investor. That's why he's doing this big roadshow. That's why there's campaigns and everybody's like, oh, yay, this is like totally egalitarian. No, it's not. This is a crappy
Well,
company. It's a
let's
crappy company that's
let's
losing millions of dollars. And
let's skip let's skip forward just a little bit. Those ETFs, I'm going to get there. I want them to be EFTs. Let me and like NFC, near field communication is like I think what I'm where I'm going with this. But anyway, those indices are built for a reason, right? They're built for
yes,
stability. They're built for
yes,
long-term stability. And
yes.
so, can you talk a little bit about historically what it's taken to get on to some of those indices? IPOs have never made it into these indices
No,
before. These indices that
they
are
have to
designed
be
for stability.
seasoned. Yes, they have
Right.
you have to be a seasoned company in order to have it happen. If we go all the way back to say
Mhm.
1956 when Ford went public, you had to trade over the counter for a year. Ford, which was not a new company, which was not a risky company, even when it went public, already profitable, already with a storied history, had to wait a
Mhm.
year in order to join the New York Stock Exchange and the indices that are there. The
Yeah.
indexes have a lot of rules. One of them is called seasoning, meaning how long have you been publicly traded before you purchase it? Historically, those numbers have been a year, 3 months, even something a little bit longer because the most volatility that happens in an IPO, it's within the first 2 weeks. Right. So they are trying to avoid that, let it settle down, and then it can join the indices so that it can be reflective of the longer run that's going on. The S&P has additionally profitability requirements associated with it. You must be profitable in the last quarter and cumulatively profitable over the last 4 years before you're allowed to join the indice. That's why Tesla was not in it for over 10 years.
Yeah.
Musk
Yeah.
is pushing to change that and has convinced several of them to go ahead and change it in advance of what's going on. So let's talk about what's changing.
We know that volatility is not good for the market, right? It's uncertainty. And in general, uncertainty is bad. So if we are going for stability and a lack of volatility, then these rules are in place for a reason. The NASDAQ was the first one that I learned about from you. And that was that the NASDAQ has rules on the number of quarters that you can, or the number, you have to be profitable or you have to be, trading for a certain number of quarters before you can go into the NASDAQ 100. And they have created a fast entry program, which just has the Musk written all over it. The name of it does. And it's my understanding that so after 15 days of trading, if your market cap is still big enough, you can go into the 100.
That's
Yeah.
exactly what's happening. You're going to move into the NASDAQ after just 15 days of trading,
Right.
which means when that happens, anybody who is invested in QQQ is going to have the ability to own that. Actually, it's not even have the ability. They're going to be forced to
Forced
own
to
it
own it.
because it's
Yeah.
a part of the market. So if you are passively invested in QQQ, which is the NASDAQ 100, your index will automatically buy whatever percentage of your money will go into SpaceX that is equal to the percentage of market cap weight of SpaceX to the entire companies that are in the NASDAQ 100, right? And that's awful. I gotta tell you, it's
Okay.
awful because
So
it means you're going to be investing in this pile.
Okay, just to kind of take it the next step further, an index is a percentage, right? So an index means I own a percentage of a whole, and a whole is only one. So we get a if you have $100 in the Nasdaq today, and SpaceX comes along, what happens
So
to my $100?
so what's happening right now is you're invested in 100 different companies in that
Hmm.
$100. As a percentage, each company is worth the percentage that it is as total with market cap. If SpaceX comes in and ends up being, because it's got such a large market cap of being, say, 4% of the Nasdaq's 100 total market cap, what will happen is all of those other companies, 99 companies, have now shrunk as a percentage of their items. And so the company who's running your QQQ, maybe it's Charles Schwab or whatever, will sell down all of those companies to the smaller percentage and
Hmm.
use that money to buy SpaceX stock so that it is now 4% of your $100, $4 of it. and the other 96 is distributed under the 99 that are still there. And one company just gets kicked out,
Okay.
right?
And
The
I can get
smallest
that. That's the
company.
smallest one, right? Yeah, for sure. I get that. I get that. Okay, so but here's the question I have for you now. Can you sell options on this?
Oh,
Sorry.
yes, you can, and it's a
Sorry,
great thing. So, no, 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 no. Please understand,
like
rebalancing day is a huge trading opportunity. There's a ton of
yeah.
algorithms and other things like that that are trying to predict which companies are dropping out, which companies are getting added. How do you front run that in order to make money? So, if you're that number 100 on Nasdaq's 100 that's going to get kicked out because SpaceX is coming in, believe me, people are shorting that sucker
For
trying to
sure.
make money on the stock going down. And if you know
Right.
what is the next ad before it happens, people are buying that knowing that once it
Right.
gets added in, it's there. So there's actually set dates for a lot of indexes of what they call their rebalancing date. And you will see a lot of stocks move in advance of that as people are trying to
Trying.
capture that change, that catalyst that's going to move stock prices.
Got it.
But
Okay.
but that's
So
beyond the point of what we're talking about.
yeah, I know. I'm sorry. I'm like shiny object at the moment. So and the jet is headed your way. It just went
And
over my
to be
head.
honest, my husband and I both do that with the Russell 2000. We
That's
are
awesome.
looking at that. Mhm.
So okay, we've got uh, we've got a whole bunch of people who are lined up ready to buy SpaceX on the
Yeah.
first day. Okay.
Active
And
investors buying on the first day.
yep, and then
15
it's
days
supposed
later,
to level.
passive.
Yeah, it's supposed to level out over the first 2 weeks is the theory that Nasdaq said, okay, after 15 days, well, we're gonna put it into the 100. But therein lies a bit of a problem for me. The forced buying at day 15 is going to raise the price again, right? Or is
Yeah,
it already
but
factored in?
you're actually a little bit behind the story, and that's 15 days, right? We've got 5 days actually. So if you go to the FTSE's Russell 1000, they cut their item to just a 5-day season. So there's so many indexes out there, right? There's the Dow Jones,
Yeah,
there's the FTSE, there's the Russell, there's the value line. There's a ton of different indexes. Most people have heard of the S&P 500. Most people have heard of the Nasdaq, but there's actually thousands of indexes out there. The big ones, though, are changing their rules for the most part. After 5 days, it's going to join the FTSE Russell. And then in 15 days, it'll join the QQQ. And we will see artificial demand in the passive form having this happen. Now, for me, the biggest ethical issue associated with that is that you are now moving the risk of this highly unprofitable, risky company away from the professionals who have to have rules in order to invest. If I want to invest as what is called a professional investor, I have rules about having $1 million of investable assets. I have to have a history, et cetera. There's tons of rules about me getting into a risky company like this. Once you move it into an index, all of those rules are gone. And
yeah,
so the indexes had rules in order to protect the everyday lay investor from this type of risk. Now, the basic tenet of all of finance is the greater the risk, the greater the potential reward. And right now, what we're seeing is a moment of massive greed that Elon Musk is playing into that says, oh, well, we should allow the everyday Joe to have this potential really big increase, this doubling in one day, etc. So we should change these rules. But understand, Musk, it gets cashed out partly on day one.
yeah,
Long
yeah,
term,
for
it's going to
sure. Yeah.
move from those professional investors to the everyday consumer by day 15, right? And that's
Yeah.
ridiculous.
You and I believe the same thing. I do want to voice the other side of the argument though.
Yes, let's
So
go for it.
so the other side of the argument is that if you really believe that SpaceX is all that and a bag of chips,
Yep.
then you would be doing a huge disservice to us mere ETF traders. Did I get AFTP?
ETF,
Yes, I got it.
ETF.
ETF traders by depriving us of access to SpaceX and all its goodness and all of its market increases right after the IPO. Is that the fair
So
side?
that's the argument, right? That's the argument. But I
Yeah.
want you to think about the timing of this argument, okay? We're gonna IPO on day one.
Mhm.
Okay. Now, what did Jim Cramer say is going to happen on day one?
It's going to double on day one.
It's going to double in day one. So we're going to go from 1.75 trillion to what he's suggesting is about $4 trillion.
Oh,
When does it get eligible, even under fast track for these ETFs? Day 5 and day 15. Okay.
mhm.
So it's already doubled
It's
before
going
it
to go up
even
again.
gets
Yeah.
to you.
Yeah.
And now, because it's 4 trillion and not 2 trillion, it's no longer 4% of the NASDAQ, it's 8% of the NASDAQ because it doubled in size, right? So now
Yeah.
we've got, and so what will happen on day 5 when we've got that rebalancing, then we get day 15 when we've got that rebalancing, we get artificial demand going in there associated with it. Now, the market prices into the future. That's one of the reasons it's likely to double on day 1. It doesn't mean it's going to double again on day 5 and double again on day
Mhm.
15, which means you and I, as the index investors, not likely to actually receive it. The reason that it's going to double on day 1 is because what's going to happen on day 5 and 15,
Right. It's already
which means it's
pricing in the
already
future.
priced in,
Right.
which means I didn't get the run. I still didn't
Right.
get the run, but guess who gets it? Those professional investors who are already
Right.
making all the money. It doesn't work. It
Right.
doesn't work, right? So we get all the risk of it tanking and
Yeah.
none of the glory of it going up.
Yes, I agree. And the nice thing is that there is public dialogue about this. I have not seen anybody who has said it's a good thing.
Actually, what I've been reading is the other way. I can't find
Oh,
people who are saying this is a terrible idea. How can they do this
I'm
to the
searching
everyday
for what a
Joe?
terrible idea it is.
So,
So that's why I'm like, this is a terrible idea. Reinforce my
yeah.
opinion of it.
There's
Yeah.
there's a I've seen a few podcasts and like the Bulwark or whatever that's done it, but no, I most of the people are like rah rah rah. Like turn on CNBC if you want to see the positive spin.
Okay.
Uh,
All right.
it is terrible. Now,
S-
go back. We're telling you all this stuff. One index said, "Uh-uh, I'm not
Right.
changing my rules." The
Yes.
S&P 500.
So the S&P 500, you have to have a profitability component. Is that correct? Which I think is
Correct.
a brilliant, and it's not just one profitability number. I
Nope.
think you were telling me not only do you have to be profitable in the last quarter before you IPO, do you have to have a history of profitability?
You have to
What
have
is it?
four cumulative profits over 4 years. So you could have
Right. Okay.
3.5 years of losses and then be profitable in the last 6 months, as long as those 6 months of profits wipe out
Right.
all of your cumulative deficit that happened in advance. Okay. So, and it's not before IPO, it's
Right.
before inclusion in the index.
So, what are the pros and cons for S&P 500? S&P 500 saying, "No, we're not gonna change our rules." What's in it for them? Like, I only see it as an index, right? Like, if I they track they report a number.
Yeah.
They report a number that tracks companies, and I can invest in those companies or not. Like, what's in it for them?
So
Why are they doing
S&P
this?
5 S&P, the company, Standards and Poor, the company sells data,
Mhm,
right? That's what they do. They're selling data about it. So what they choose to be in that index is really important. They are the number one index out there that is the market, right? And
mhm,
as a result, they are the biggest index that's happening. And
mhm,
people who are advertising that they are an S&P 500 index because they have to use the S&P 500 name
mhm,
have to pay a royalty to
mhm.
Standards and Poor. This is their business,
They're
right?
protecting
And
their brand.
so
Yeah.
part of it is really interesting in that there's an understandable reason why FTSE and Nasdaq, et cetera, are saying yes. Why? Because if this is the way the market is going, and they can show these huge profits because they've included SpaceX, then more people are going to pull their money out of S&P indexes and move them
Mhm,
to Nasdaq indexes, potentially chasing returns. And the
mhm,
S&P, which is right now ubiquitous as the markets index, is potentially risking that answer, right?
mhm,
If everybody all of a sudden is now saying, no, 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 the standard index is not the S&P, it's not the Dow Jones, is what it used to be.
mhm.
It is this, it is the QQQ, because that's the way the world is, then they could lose that. So they are
So
taking a little bit of a risk. However, they're also protecting themselves because if it
right,
goes,
yeah, yeah, exactly, against the volatility. So for people that, and I'm thinking as a researcher right now, and I don't know if this is even the right angle to look, but So we know that uncertainty is bad just in general for our economy, and just yeah. So we want to minimize volatility. But I'm imagining writing the research paper that includes the Nasdaq 100 versus the research paper that includes the S&P 500, and the asterisk that's going to have to be in that paper for this moment in time. Because like COVID is an asterisk on many
Yeah.
charts. I think they're protecting themselves against the asterisk, which
Yeah.
I think is fascinating because you can't predict the future because this asterisk, you got to correct for this little asterisk that just happened, which is SpaceX. I think it's really smart. They're betting on their integrity.
Yeah.
I think that's really interesting.
It is fascinating. We're going to see what happens. I mean, they've weathered similar issues before, right?
I own a Tesla. I own two Tesla vehicles. And I think Elon Musk is a genius, but I think he just went like wackadoodle over some at some point. Like he just went crazy. But I love the vehicle and I love the capabilities of it. But there's something going on in these companies that I think we are going to have to talk about in the future. You did tell me though, you believe that one of the reasons that SpaceX is leading this initiative is to acquire Tesla. I
Yep.
mean, do you think that's a reasonable near term, or do you think that would be like midterm? Like
Oh, no, no,
they're
it's
going to
near term, near term,
near term.
near term. I think
Interesting.
within a year, SpaceX is going to buy Tesla because it wants to add
Interesting.
it to its market cap. And it's going to buy it for
Right.
stock, and that's going to be a way that it's going to get more funding. And it'll
Right.
issue stocks at the same time, shares at the same time, which will grow that market cap, which is how Elon Musk is supposed to be compensated. It's based off of market cap. The question becomes, I mean, there's so much shadiness going on. Well, that there's so much interrelation between the Musk companies that would also then be just, have to be worked out if they become a single company. Like at one point, 1 in 5 Cybertrucks were being purchased by another Musk company, SpaceX.
So circling back to what do we learn from this, or what can we take away from this? I know I really struggled to come up with what is the key takeaway, because every time we talk about this, we get frustrated that we've got, as much as
I
we
don't.
love capitalism, we see individuals getting taken advantage of, and we really, it's very, very upsetting to us. So where do you find first manager takeaway? What should managers know from this?
So I think the end of the story is that Musk is changing the rules to suit him. Okay, and honestly, that's not a bad management lesson to understand. Number one, can you change your rules to find an answer, to your problem? But number two is, if the rules are changing underneath you, what do you need to do? Right. So my first takeaway, when rules change, know your anchors, know what
Yeah.
your baseline requirements are for both moral purposes as well as for your operations. So
Yeah.
that you don't erode your own business, but are able to adapt when the rules change.
And if we could make that more concrete, right now I'm thinking in different organizations I've been in, you have a clear North Star. This is what the good of the organization looks like. Is that one of the anchors that you would latch onto? Like, this is what good for us looks like? Or do you think that he's even changing the rules of what good looks like for a lot of
No, I actually think
companies?
that it's exactly what it is. It's what does good look like? And we bring it down to the individual manager level. I want you to think about
Mhm.
one of the assumptions that are happening across most companies, which is that AI is going to improve workflow. AI is
Mhm.
going to make us more profitable. AI is good for our business, right? And what
Mhm.
we've discovered as we've been talking is that that's an assumption that needs to be challenged because that's not an anchor, right? That's an assumption.
Correct.
The anchor is I'm a really good we'll go to my industry, right? I am really good at delivering education. Can AI
Mhm.
improve that? Possibly, right? Can it also make it worse? Yes, it can. The rules are changing in my industry, but I have this anchor. I know what good education outcomes
Look.
are.
Mhm.
I
Yes.
need
And
to
yeah.
anchor on that and play with different rules to get where I need to go.
Which I think that's really helpful that you put it that way. But everybody's struggling with the same thing. What do I use AI to help me be more efficient or better at what my unique value proposition is? So I
Yeah.
think that's great. The other one that I see playing out, and it happens to me too, is like, what do we do in uncertainty? So we talk a lot about how uncertainty just is getting faster, right? There are uncertainty cycles in the market, and the cycle that we're in is actually longer than most. I think it's because AI is moving so fast, and so it'll settle down in a bit. But in uncertainty, managers can't be paralyzed, right? And so I think you have to decide. The point is like, when are we going to make a decision on this thing? And document your assumptions so that you can go back and check, are they still true? Are they still true?
Very good point. Very good point. Yeah. And at some point, you do have to make the call, right? Things are
Yeah.
changing so fast that you're like, okay, I'm going to wait and see what is happening. I'm not going to adopt AI yet because AI is changing so fast that it's not going to
Mhm.
be correct in 6 months. Yeah, that's true. It's going to be different. But if you get so far behind, you may find yourself way too far behind the eight ball, right? So you say, I'm going to give myself this much time for education, and then I'm going to make a decision. I'll revisit it. I'm not going to be
Yeah.
anchored into my final decision, but there's going to be a time when you basically have to make a choice, move
Yes.
on, right? And uh,
Agree.
you got to your Nasdaq, your S&P. Do I let Tesla in, or is not Tesla? Do I let SpaceX in, or do I keep them out? Both of them made a decision. They may revisit it, but they made a decision.
And S&P 500 said no. And so I can't wait to see all the research papers published in 6 months or a
There you
year.
go.
There you go. Wrapping it up, because this was a longer one, but I know it's one we're super passionate about. SpaceX goes public on Thursday at $135 a share. Jamie, what's your bet on what it will close at that day?
205, not quite
So
double.
not quite double. All right. I have no idea. So I'm going to go with what you said. Like Jamie versus Jim Cramer.
There you go.
And so it will be the largest IPO in history, which will be super fascinating to watch. And I think we're watching a company go IPO that really isn't like one company, it's three different companies.
The question becomes, is it really going to look like a rocket going off into space? Or are we going to see it go up and right back down and crash and burn?
I think it's going to go up, and then it's going to be slow. It's not going to land itself very nicely like the rocket, SpaceX rockets do. I think it's going to be we're going to watch it really slowly and steadily fall, but we'll see. We'll see what happens. So,
We will.
um, thanks for this awesome education, Jamie.
Yeah. Thanks for listening to Seriously, What Can They Be Thinking? If you got something out of today's episode, share it with somebody who manages people. The index rule conversation applies to every single industry that's out there.
And I am really, really excited about talking about the Anthropic IPO because that's the one that I'm trying to get my money into. That's the one I actually want to buy, which is coming soon. I have no idea when. I'm sure you do. You've got an eye on it. So, but
So
that also is
just
going to
really
have an
quick,
impact.
Anthropic filed at the beginning of this month. Their IPO
There you go.
likely October because they're trying to beat OpenAI to market, but they have to go through the SEC approval rating. Now, SpaceX went faster than expected, so maybe October is actually long dated. We'll find
I hope
out.
so. Awesome. Very good. Well, we will talk about that in the next episode.
Yeah, but until then,
Keep your spreadsheets handy and your coffee strong.
there we go.